Hey, what's up, good people? Welcome back to Stock Up with Larry Jones. If you are new to the page, please go ahead and hit the like and subscribe notification bell right now. You've been rolling with me for a while. Hit the like button. It's a simple gesture to keep me alive. Hey, I love and appreciate all you guys. I love you enough to tell you that never fall for spam. I will never ask you to send crypto or money, talk about a WhatsApp or a broker. Even if they say they're me, they're not, they're lying, right? Not just my page, any page. Now, I want to share something with you guys, get right into it. And this is part of my psychology trading, which I have made more money with psychology trading than I have with anything else, technicals, anything else. Psychology trading, me personally, have paid off the most. Remember, I am, anything I say is not a suggestion for you to buy, hold, or sell a stock or a crypto, okay? Now, what I'm going to say applies to stock and crypto. And I'm not trying to be like anybody else. I'm just trying to be like me. I do have a course that I was going to release, and I am redoing it. I'm simplifying it, and I am not releasing it now. I didn't release it at the top of the market because we were going into, I saw a bear market coming. If you start with these principles at the bottom, then all you guys will make money, and that's going to make me look like a hero. All right. To be quite honest with you. So I'm not interested in short-term money. I'm interested in you guys being successful. All right. Let's talk about this. I want you guys to write this down. Boom, bubble, burst, bottom. Okay, these are the BBBs. Boom, bubble, burst, bottom. And I'm going to share something with you. And for those of you technical guys, that's not the way it goes. This is Larry's version. That's going to help us. All right. And I'm just going to say this right now before I show you this. The jargon that was created for the stock market was created to keep you and I out of the market. They simplified with all of these terms, tapering, transitory, all of these words. If you ask me, it was created to keep the average man out, right, of the market. And there's a lot of terms that they just simply complicated. What I've been taking the time to do was to simplify it so you and I can understand it. In the early days, you had to pay somebody. I don't care if you wanted to sell one share of Tesla. You had to pay somebody $100 to buy it. Then you had to pay somebody $100 to sell it. Okay. And so let's get right into it. That's a whole nother lesson right there. Now, this is part of my psychology trading, and I just want to share this with you guys. So let's go right here, right? This is a chart that I made, and this is what I want you to know about where we are and the opportunity that we have right now to make more money than we ever have in the stock market. Okay? Bubble, boom, bubble, burst, bottom. Okay? So now, this is where most people get into the stock market, right in the boom, right? Oh, you hear about the stock market, it's good money and everybody's making money. Shiba Inu is taking off, Palantir, ChargePoint, all of these companies, they're taking off. And this is when most people hear about it. AMC, GameStop. This is where everybody hears about it. And that causes a boom. Stock market goes up. What happens from there is they get overvalued. They get overbought. And now they go up to the PE ratios are insane and they are expensive stock. And now we're in a bubble, right? Same thing with real estate. The real estate market right now is in a bubble. These houses cost way more than they should. So it goes to a bubble, right? Then when reality hits, we found out that it's overinflated. So then we go through a burst. All right. Hang with me because this is going to make you more money than anything. Then after it bursts, you hit what? A bottom, right? So right now, I believe here's where we are. We are here. Okay. And after the bottom, guess what happens? Bull. Okay. The bull market is what happens after the bottom. Okay. And then you know what happens? It rinses and it repeats. Okay. So bottom. Okay. Bubble. Boom. All right. Boom. Bubble, burst, bottom, and once we hit the bottom, we're heading to a bull, and then it rinses and repeats. All right. Now, what I just shared with you guys is exactly what happens in the rolling wheel. I'll call this a rolling wheel. It keeps rolling, and you go, well, if you're going to lose all of your money, then why put money in? And so what I'm going to say to you is it depends on if you know how to roll with it. All right. For instance, if you get in during the boom, all right, so you get in during the boom, here is where you do profit taking. All right, you profit take here at close to the bubble, right? And then you let it come all the way down. And then you start to dollar cost average here between here and here. Here's where you buy. Okay. And this may be dollar cost averaging right here. So here's where we are. We're between here and here. Here's where we are, good people. And then what happens, the reason why you keep dollar cost averaging here and dollar cost averaging here is when you go to the bull market and you get up here, you have made all of this money. And so that's what you do, and that's how you get in. Now, if you are buying close to the bottom and you keep holding those stock, the market will always tell you where you are in the cycle. So if you start buying halfway up before the bubble, you're good. Just hold those. Those are the stocks you hold. And you just keep averaging. What happens over a period of time, it gets higher and higher and higher if GDP keeps growing. And this is how you build wealth. So if you know where you are in the rolling wheel, remember, boom, bubble, burst, bottom, and then bull. I had to look at it. And that's the cycle that I see. So I'm going to use the Dow Jones as an example. You can use any of the other indexes, S&P. Charts are going to pretty much look the same. So as you can see here, March 28th of 19th. If you look at here, look, it was going up, 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 up. Look at what happens, all right, as we zoom out on this chart, okay? So here, let's say that this was the boom, all right? And let's say that this was the bubble. Now, we know the market was going up at this point, and it was at that time, we were looking like, man, this is really, we've been on a bull run. So then we get a burst, right? What caused this burst to drop below this line? So we get the burst here. What caused this actually was COVID-19. So something always causes this burst, and the burst wind up being a crash, a correction, a recession. All of these things comes the what happens to your stock and your money is all the same. We start losing, okay? And let's just say this is the bottom. We know that COVID-19 caused this. Now, I'm just using this as an example. And remember, what comes after the bottom? So remember, here's where the burst is, and here's where the bottom is. And remember, like I showed you before, where we should be buying is between the burst and the bottom. Okay, so after it's fallen and we see, we're in a territory where we're going negative, here's where we buy. We buy down this way and we buy up this way. Okay, and so I believe we're somewhere here. But what happens after the bottom? Okay, remember, boom, bubble, burst, bottom, and then bull. Except this bull run, just, you see this boom? And you think that this is the top, right? But what happens is bull. Look at that. Just kept running up. If you understand this now, that we're just in a cycle, right? We're literally just in the cycle. If you know where you are in the cycle, you can make money year over year if you're just patient. Now, there's been people that have been investing for a long time that really, truly don't understand about this boom, bubble, burst, bottom, and then bull. And they keep doing what? They keep buying at the top and selling at the bottom, all right? Having FOMO at the top and then panic selling at the bottom. And then they repeat and they cash out and they tap out. So I don't want you guys to do that. What I want you guys to understand is that the people that bought here, okay, you have a reason for concern, okay? You're still going to make money. But the people that bought here, I could see your concern. But what happens is some of the people, most of the people that's buying here, that bought here, they refuse to buy here. And here's where we should be buying. So if we are between here and we're here, then this is the time we should be buying because no one can guess the market. Now, I've kept saying the bottom is not here yet because I see that we got further way to go down. But as we dollar cost average in and we continue to go down, don't fret because we're in this area, right? And it can keep going down. But just know at some point it's going to moon. It's just going to go back into a bull market. All right. All right, good people. I hope this helped you. And I wanted to get you this information right away. And remember, for those of you that are new to the market and for those of you that's been trading and don't understand that this happens and it's a rolling wheel, it just repeats, leave me a comment that if this helped you any, because I've been a help to people that have been investing for 20 years, but just really didn't understand the whole cycle of things. Okay. There's a lot more that we can discuss, especially in the area of psychology trading. And I'll also want to tell you guys that there are investors that only trade on technicals that left a ton of money on the table last year. All right. I'm going to leave it right there, good people. I love you guys. And always live, love, laugh, and learn. I love you guys. Peace.